Robschild. Nothing I say is investment advice. Welcome to the show where we view financial markets through crystal ball gazing. J.P. Morgan once said, "Millionaires don't need astrologers, but billionaires do." And so we begin. Sorry about recording this show later than normal. I had to go to a classical music concert last night. It's just, something billionaires have to do. It goes with the territory, I suppose. So it is the 6th today, but I'm recording this show for April 5th, 2024. The data that came out on Friday was interesting. We had the unemployment rate that came out as expected. We had been ticking up. I've been talking about this a lot, and I'm going to show it again. But the expected was for us to go down from last month, 3.9% reading to a 3.8, and that's what happened. And then for the U.S. non-farm payrolls, this is really the big number that has been hitting the headlines because it's a lot higher than expected. We expected to actually drop from 270,000 to 200,000, and we actually went up to 303,000. Now, I noticed on Gareth Soloway's show, he thinks that Thursday's dump in stocks was front-running this supposed hot non-farm payrolls data. I'm in complete disagreement with that, and I'm going to go over some charts to explain why. Whenever major economic reports come out, I think it's always a good idea to take a look at the chart. Where has it been? Where is it going? What's happening here? He had been saying on his show, like, oh, is this going to be kicking up? Is this like, people are going to be so much more worried about inflation? And certainly I think there's a little bit of that, but I think that's the dumb money reacting to what's going on. And I think there's bigger, slower, more powerful movements in markets. But yes, it did go up a little bit. I mean, look over the past 3 years how volatile this reading is. It seems like you can go from 272,000 to 862,000 in 1 month and then go straight back down to 272. So I don't think this number is all that relevant to most investors. And when I scroll out to the 5-year time horizon, just to see how volatile this thing can get. At the bottom of the COVID dip, we were actually at negative 20 million, and then after that, we're by June of 2020, we were up 4.5 million, and then this thing, it's December 2020 negative 115,000, then we're up 1 million. So this is generally, it seems like a pretty violently volatile chart, and a small movement like this I don't think is very significant at this time. To add to my viewpoint, I think the unemployment rate is a much better metric to look at, and this is the slower, more powerful thing going on. And as I had said before, I was expecting it too to go tick down to 3.8. I mean, this thing is playing out like clockwork. You go up and then down a little bit, up higher and down a little bit, up higher and down a little bit. I mean, I do expect this pattern to continue higher, and that's what I'm seeing here. I'm not going to believe that jobs are so much stronger unless, for example, if we were to take out the lows of November through January 2024, maybe my view will change. Maybe I'll throw in the towel and say, okay, well, the economy is stronger than I think. But right now, this is going higher. It looks to me like it's going higher and higher right now. On to some notable charts. This is the S&P 500. Now, Thursday's giant red candle day, I think this is the biggest indicator so far that we have evidence that this market's rolling over. We haven't seen a day that has shown this much weakness in a very, very, very long time. A candle of this magnitude is very formidable. And Friday, what the heck happened? Why did we bounce back? Especially when, supposedly this non-farms payrolls number came out so hot, you'd think like, oh, well, then that means tighter rates. That means the market's just going to keep going down, and so we had a pop. But, you know, leaving the noise of that aside, this candle is not a formidable candle of Friday. This is called an inside day. And so what an inside day is when the entire candle, including the wicks in this case, is inside of the solid bar of the last day. You can expect whatever trend has been happening to continue. And I interpret this as the trend, we are going down, that this was really what I would describe as a dead cat bounce for sure. I fully expect Monday to be a bloody red day and for this to continue. It's not typical for markets to go straight down. For those of us that were watching markets through COVID, that was a very abnormal event. Straight down doesn't normally happen. It bounces on the way down. It's just how it works. It's how traders make their money. They buy after it drops, and then they sell, and then that wasn't a very good explanation. I digress. Similarly, in the Qs, the NASDAQ, also an inside day. This candle being inside the previous candle. And I believe this means that we are going to keep heading down here. I am still short with 5% of my portfolio shorting the NASDAQ. Now, notably, I also wanted to bring up the Fear and Greed Index. I had talked about on Thursday how we dropped to a 49 reading neutral from the mid 60s. It was 64, I believe, on Thursday, and then 49 on Wednesday, and then 49 on Thursday, and then Friday we jumped back up to 61. Now I was surprised by this. I thought that this might have stayed neutral, so this is interesting. Could this reverse? Is it possible for the markets to just come alive here and just keep going up? No. Next chart, the VIX. Now, this is the fear gauge. When it goes up, the markets are generally more fearful, and this is not showing weakness. This is showing, we opened higher than the previous close. We closed, here, but this is a bullish pattern. This looks very bullish to me. I think the VIX is going higher. I think markets will be continuing to sell off. The last notable chart that I wanted to bring up today was silver. I think it's notable. This is just pure price of silver futures contract. This is getting kind of strong. Silver is getting popular. I'm always reminded by looking at any chart at any time that at the end of the day, the stock market, the value of anything, whether it's housing, stocks, crypto, silver, gold, you name it, the value, how is the value determined? Is it because something is inherently worth more? Graham's wisest words that I have to remind myself every day. Markets are not a weighing machine. They are a voting machine. The price of assets are determined essentially by people voting. It's what people agree that the price is. And, it's not really possible. Oh, of course it's possible to predict the future and see the prices of things in the future. I mean, I'm the guy with a crystal ball, right? I mean, as far as predicting where markets can go, I think the best approach to trying to predict where things can go is see where things are getting kind of ridiculous, kind of overextended. if the price of retro 51 pens goes to $1 million a pen, at some point, there's got to be a correction. Even in Rolex watches, people were talking about that as being a great investment. Like at the time that they were at the highest price, they've come down since that. And then when things get overly cheap, and I mean when it comes to especially stocks and bonds, using logic and basic valuation measures can give you an edge. When you see an immense amount of speculative value in how much money a company will potentially make in the future, those are people gambling. And when people are gambling, that's also a good time to be able to take advantages in markets. And I think that's really the best, most surefire way that you can get an edge, as far as predicting the future, essentially. So I don't know if that was very clear, but I hope you enjoyed the show, and thank you for watching. Robschild.